Inflation is high, it's too high, and we need to get it to our 2% target. It's not as high as it used to be, so it used to be a whole lot higher, but we still have a ways to go. What I've expected for quite some time is that the pathway to 2% is going to be slower than people expect, and it'll be bumpy, right? So data never comes in so orderly that you don't have sort of a little like hops here and there. And sometimes I try to remind people, like when you were in high school or grade school and you did algebra, and you tried to trace out a line, all the points come in, very few of them are on the line. Like some are going to be above and some are going to be below. And the more important thing to think about is the line still going where you want it to go? Today, the answer to that is still yes, but it's slow. It's not as steep a slope to our 2%. For me, that's okay, because the economy is producing a lot of jobs. I mean, we have a dual mandate, as I mentioned earlier, so if we're getting more people into work, getting wages, getting them paid good wages, those are all important things. And if that can happen while we are still seeing inflation move to 2%, I'm comfortable being patient, right? So right now, where our stance is, I think, is a restrictive stance. It will slow the economy down and eventually get us to 2%. But I'm not in a mad dash hurry to get there if all these other good things are happening. So as we move forward, I'm going to be watching labor markets to make sure that we're still creating jobs. I'm going to be looking at wages to make sure that wages are in a positive space and above the rate of inflation, because if wages are rising faster than prices in the marketplace, families are getting ahead. They're becoming more secure, and that's an important thing. As long as we can keep those things going, and inflation has the signs that it's moving to that target, I'm happy to just stay where we are. So I should just, in case you're wondering, like in my outlook, inflation continues to fall over the next 2 years. The GDP for the economy, it will slow, but it will not tank or crater. I don't have a recession in my outlook. In terms of our policy, I'm of the view that things are going to be slow enough this year that we won't be in a position to reduce our rates until toward the end of the year. I'm just going to let things happen. But the two words I use these days are grateful and vigilant. I'm grateful the economy is growing fast. I'm grateful inflation has come down off of its heights. But I got to stay vigilant, because as we've gone through the pandemic, surprising things have happened almost on a monthly basis. Right, so you just have to be ready for the unexpected and then incorporate that into your model or your outlook. And if I stay on that, I think we're going to be all right. I think our policies will move appropriately, and the economy will continue to grow as we get both of our mandates back in line.